You have been involved in money laundering issues. I think there are investigations ongoing. First of all, can you update us on what you guys have found out?
No, I think what we try to say, we did in press releases. So you see, if we have some news to tell, you saw we got a fine of 775 million. I think it's a bad thing, and we do our utmost at the moment to apply to all regulations. So a big program going on, and that's the only thing I have to say about it at the moment.
Do you see clients turning away from ING DiBa because of this?
No, not at all. No, I think the impact on ING in Germany is extremely limited. We don't see any effect yet in Germany.
Give me a sense of the German banking landscape. So for the moment, it's quite fragmented. Almost day in, day out, we hear about possible consolidation. What part could ING be in all of this consolidation or potential M&A?
Now, what you see a little bit, of course, the German market is very fragmented. And yeah, we always say there are more supermarkets in Germany, there are more banks in Germany than supermarkets. And, but you see already a little bit consolidation going on. If you see on a yearly basis, I think about 100 banks disappear to a number of about now 1,800. So the good news of ING in Germany is organically we grow very fast. We had a very good year last year, growing fast. So, of course, we keep our eyes open all the time. And, yeah, if there's news to tell, we will tell.
But would you see, for example, buying someone else, a domestic player, to get either more client data or also just proving your integration skills?
Now, what I see more is maybe not so much buying skill, but what we look is, I think, if you see the whole transformation in the banking sector, where we as ING in Germany started with as a savings bank, then adding other banking products, we try now to diversify. So we're adding now SME loans. That's why we bought, for example, a fintech called Lendico. So if we would buy something, I would look much more to what fits strategically in diversifying our business and also be ready for the future in the new digital world where data is much more important. So less about skill, less about maybe some other banks, but getting some capabilities where building up our own capabilities is much harder than buying those capabilities.
But would that be fintech companies? Is it harder to do your own fintech inside? Do you have to look abroad or actually look, to another player and buy fintech so you have that technology?
Yeah, I think so. That's why we bought Lendico, because we thought building up our own SME business is much harder than buying the whole digital platform of Lendico and building from that ourselves. And I think the second part, it's also on the conference we are today, is partnering. Given a good example, we truly believe in robo-advice, in investment products. That's why we partnered with Scalable Capital, because we thought it's a much better way to serve our customers. And I think in the whole transformation the banking industry is in, I think the game changer will be customer experience. So if we can add to the customer experience by partnering or working more together with fintechs and other tech companies, I think that's really the future.
You have efforts at ING DiBa called KYC, Know Your Customer. How is that affecting your clients, or how are these controls affecting ING DiBa?
Well, I think, the good news is still we are a big retail bank. So the way we do KYC, it's, of course, what the regulator demands of us. And what we're trying to is with, say, video identification, more digital ways of identification, and using technology to do your know your customer part better and more efficient. I think that's the name of the game. And I think we are, I would say, well positioned in the German market as ING in Germany.